Welcome back to another Market Open live stream. So, all right, we've got Black Friday today. Today's a big day for consumers and the economy. We'll see how much spending happens based on how many folks are emailing us for bundle coupon codes for the amazing Black Friday sale, 60% off on lifetime access for the programs on Building Your Wealth. We think Black Friday will go quite well, but hey, who knows how the entire economy is going to do. And it's a big deal because remember, consumers make up over 70% of our economy. So I'm curious to see, hey, is this going to be a recessionary type of Black Friday, or are we going to save that for next year? Kind of interesting, but also kind of scary because I think the last thing we're thinking of is, oh yeah, this recession is going to last until next year. That'd be very dirty. We don't want to think about that at all. But what we do want to think about is what's going on with the stock market. Stock market futures right now sitting at Dow flat, 0.07 up, S&P 0.04 down, NASDAQ 0.35 down. So slightly mixed plus minus. You've got another report of it's just so exhausting at this point. Another software update for Teslas in China for 67,000 vehicles for, again, a software related issue regarding the battery management system. And then you also have a real, finally, physical recall of 13,000 vehicles for a seatbelt issue, which will require, obviously, a physical update for the seatbelt issue. What's wild, though, is, of course, the mainstream media has taken the approach of, oh, here we go, 80,000 recalls, even though 67,000 of those are really just an over-the-air update. I think it's quite laughable how, essentially any kind of update is called a recall when it comes to Tesla. At this point, it's just sort of entertaining how regularly these recalls happen, but what are you going to do? So Tesla doesn't seem to care, though, because in the pre-market, the thing is up 1.5%. Let's take a peek at some of the bigger movers here in the early portion of the market open. We are at 3% up on Matterport. Not much movement, though. Not a lot of divergence here. And then to the downside, Rockwell Automation, the only thing down really 2.5%. Otherwise, everything's kind of just in that flat radius. So we'll see how things end up moving. Let's take also a peek at treasury yields and oil. Oil's in a really interesting spot because you've got this talk about potential price caps in Europe, which could shorten supply, lead to some aggression by Vladimir Putin, and potentially against Europe again. And it's debated how that could potentially impact the oil market. We don't actually know if those price caps are going to come into effect in Europe. Generally, price caps lead to shortages and higher prices around the world. At the same time, though, you have China kind of leading this sort of anchor for oil, and the reason for that is folks are very concerned about the explosion of COVID cases in China. Now, that doesn't heavily seem to be affecting the stock market in China. I think people are sort of almost numb to the idea of COVID lockdowns at this point. But we are thinking that overall consumption declines or travel declines in China could, of course, lead to a decline in oil consumption. You're already seeing declines in travel across the board, whether it's subway usage or just mobility in general in China. So lot to consider here. Okay, next, let's also figure out what we have with treasuries. So interesting. Yeah, last night treasuries were Treasury futures were actually indicating that they're going to come down quite a bit more. Right now, they're actually green on the yields, specifically referring to the yields here, 3.74. We'll see. Let's go ahead and jump in here, see what CNBC has to say. Let's listen in.
And spend a lot this holiday season. What does that mean when they get that credit card statement come January, come February? Yeah. Does that then make for a tougher start to 2023?
Melissa, I just want to go back to some of the commentary we have gotten from retailers in the past week and a half or so. It kind of started with Macy's, and we've heard others kind of follow suit, this idea that maybe some of the shopping activity started to fall off at the end of last quarter or even the beginning of this quarter. Is the expectation that we're going to see a surge again now, or is it really just that, going back to the conversation we had before, it is more spread out and there has...
She looks scared on the right today.
Which one it is in terms of the shopping dynamic of consumers?
It'll take a few weeks to know for sure, but to your point, there has been a number of retailers that have called out a lull, Macy's being one, Nordstrom being another, Gap being another, that talked about seeing softer sales in the back half of October into early November. And the question is, does that mean that consumers are tightening their belt across the board? Or does that mean they're just reverting back to more of the pre-pandemic holiday timeline where they're shopping for gifts closer to Christmas? They kind of turn out starting today going into Cyber Monday, and then they feel more anticipation building going into Christmas, perhaps, being more in that holiday spirit. Or does it mean that people are just going to be buying less this year? And so I think it's going to take a few more weeks for us to really know, because even if they really show up strongly in the coming days, that may just mean they're looking for bargains, and then there could be another lull and a deeper lull before Christmas.
Finally, we're going to keep an eye on some of the more distressed retailers. This journal piece on Bed Bath, looking at some data that suggests they're having trouble keeping inventory stock, in some cases down some 40%, as they obviously are having ongoing issues with their suppliers.
Carl, that's something that's really troubled Bed Bath & Beyond. They have talked about how they are working on those relationships with suppliers, but a lot of the brand names like the Dysons, they do hold the power. They can choose where to send those goods, and they may not feel comfortable sending them to Bed Bath & Beyond if they don't feel they'll get paid. So they may instead send some of those much wanted items to a Target or a Walmart or another store instead. And that really matters in this environment where retailers have to execute and they really have to push consumers to spend. Home goods is already a category where people had been pulling back. And so having that fresh merchandise, those brand names, really matter and will make a difference for Bed Bath & Beyond and will help them get through this tough period, or not so much.
Yeah, it's actually a big deal. Home goods, really, these are some of the places you generally see a pullback when there's stress. Apparel, people just keep wearing what they have. Home goods, people spending less on those new towels and new sheets and new mattress covers and new fake plants. It's wild. I actually have pretty fond memories of, as a kid, always going through Bed Bath & Beyond in the malls. They're talking China. Hold on. Let's hit this for a moment. I actually really enjoyed it.
Which is topping the number of infections that we saw when Shanghai went into its brutal lockdown back in April. But the leadership appears to be tolerating it in line with its what it describes as its more precise zero COVID strategy. However, unofficially, we are definitely seeing more lockdowns, quarantines, and shutdowns of businesses, which are much more frequent and inconsistent. In the Chinese iPhone city of Zhengzhou, that city is now in lockdown until Tuesday. This comes after violent protests had erupted at the Foxconn facility there that's responsible for the 70% of global iPhone production, including for the models, the iPhone 14 models. Foxconn has apologized for what it described as a technical error in worker pay, which appeared to trigger the dispute, at least in part. And Foxconn offers about $1,400 for recruits that are departing. Apple has sent in staff and says that it's working with Foxconn in order to try to work out some of these employee issues. But there is a big question as to whether or not Foxconn is going to be able to meet its internal goal to have that facility up and running by the end of the month. Now, the tightening COVID curbs have been sparking fears of citywide shutdowns in Beijing, as well as in Guangzhou. In Guangzhou, the big export hub, that city has outright denied that there's going to be a lockdown, or even what it's described as a silent period, so kind of a slowing down of the entire city. But because city officials, including in Shanghai, have said that before and denied citywide lockdowns, and then, of course, follow through with a citywide lockdown, the residents there are quite nervous, as well as over here. In fact, here in Beijing, there's been a bit of a pushback to all of these inconsistent lockdowns and snap decisions to quarantine people. In fact, communities have been organizing what they've described as connected dragon packs, where they agree as a group to push back against government authorities that might want to take them away in case there's a case in their building. They say that they're going to stand by their neighbors. Still a big question as to whether or not these agreements will actually have any effect. But the idea is that residents are organizing to try to push back against government authorities by forcing them to abide by Chinese regulations. Guys?
Yeah, one of the things that's really quite remarkable about China is that the People's Congress just occurred. And the expectation was that, okay, after the Party Congress, we would have some potential relaxation. Now, they didn't end up really talking about COVID-0 at the Party Congress, but shortly thereafter, they came out and reduced some of the quarantine requirements and restrictions for dealing with COVID and COVID containment. Unfortunately, that came just a couple weeks ago, or a couple weeks before the surge of COVID in China. So really quite painful. There's now talk that potentially 30% of all iPhones are being delayed because of the protests that we're seeing at not only Foxconn, but also the implications of the COVID lockdowns in China. Around the iPhone City area. It's quite wild, though. I remember being in Italy just in May, and you go to the airport, and if you don't have a COVID test already in hand when you go to the airport, they won't let you check in. They will U-turn you out of the airport. They'll make you go to this like pop-up barracks building right in front of the airport. And if you test COVID positive, they press a little button and army guys with ARs come and carry you away to some COVID hotel for 2 weeks. That was in May. I mean, it's insane. That was Italy. I can only imagine what you may be dealing with in China. Let's hop back over.
Been blurring the audience for some of those matches so that the people here can't see that people outside of China are not wearing masks.
We talked about that a bit last week, Eunice, the degree to which they were getting a window on the rest of the world. And the World Cup is a big window. That's remarkable that they would take steps like that. Eunice, we'll talk more in a bit, I'm sure. Eunice Yoon joining us.
It's actually another interesting way of trying to force that compliance is, if the Chinese are like, wait a minute, the rest of the world ain't wearing masks. Come on. That's interesting.
Not a lot of data today, but we'll get Fed balance sheet and we'll watch yields, dollar index up just a touch as futures are just south of the flat line. Don't go away.
Yeah, the other thing China is doing right now is and keep this in mind as well. I guess I should say this first. The United States will probably have an official recession in 2023. And we're a big importer of Chinese goods. Obviously we export some things to them, but probably more like $3 to $4 for every dollar that we import. For every dollar that we export, we import. So we're in an actual real recession. I think we had a technical recession earlier this year based on at least GDP, but that could end up getting revised to where if we have one of those be slightly positive, then we don't have a recession technically. All these revisions are so annoying. In fact, it's probably the most frustrating thing to think about when you're a stock market investor is, what does it matter when we're in a recession? Because we're not going to officially know until potentially 6 to 12 months after the actual recession begins. So we're just blind right now in terms of a recession. But new reports out, and these have been coming out for a few weeks here now. Many reports, including now Bloomberg with the Philadelphia Fed indicator saying a recession is likely within the next 6 to 9 months. This is something that you expect as well from yield curve inversions that we've been seeing, is that it seems like the actual recession should be here in Q2, Q3 of 2023. And so a lot of companies are really preparing for that. Consumers are still spending very strong, very well right now. On Monday, we start big trading challenge in the Stocks and Psychology of Money group. That's gonna be fun. And talking to some of you in the course member live streams, it does seem like for many folks it's still business as usual. And I wonder how that'll change if and when this sort of recessionary pain continues until the middle to late next year, especially if housing gets pulled down. That's something else to remember is that consumer spending is more affected by housing than it is by the stock market. And if the housing market does trend down, continue to trend down, and we start having negative year-over-year growth, how's that going to affect spending? How is that going to affect investment into people's homes, or potentially the lack of people being interested in renovating their homes? I think you're unfortunately going to see a lot of layoffs in the world of construction, for example. I mean, hopefully not, but we'll see what next year brings. I think it'll be a great opportunity to start buying real estate and just spending more on construction, but that's coming from sort of a bottom feeder mindset. Let's listen in over here.
Over 3 million people around the globe are spending on Black Friday this morning. This is according to Shopify data. So again, that's 1.5 million, 3 million people. Of course, a lot of the stores haven't opened yet, so that's going to increase. But according to Salesforce, the average online sales, and we're going to just keep rolling with that script over there, the discount rate was actually 26% globally. That's actually 3% higher than last year, and it's even bigger discounts. So there's even bigger discounts here in the United States. Retailers,
yeah, like 60%.
and shoppers have waited a little longer to start buying this year versus last year because we had concerns about shortages and shipping delays. But we've got retail analysts on the ground, and they're reporting back to us right now. Captify tells us that gift cards are making a comeback today, with searches rising 427% year over year as people look for cash back and credit on their purchases. Now, for the investors that are listening, we pulled some data and looked at the performance of the S&P 500 and retail-related ETFs from November 1st to New Year's Eve over the past 5 years, because that's the typical holiday season. And the average return for the S&P 500 during that time frame was just over 4%. But when you compare it to the Amplify online retail ETF, which is the iBuy, you can see that that was only up 3%. And then lastly, XRT, the biggest winner of the group over here, so that's XRT because we don't have it on the screen, 6.6% during that same time frame. And some of those individual names that we are talking about would be, you've got, look at that, Franchise Group, which owns Vitamin Group as well as Pets.
All right, Boot Barn, Guess, Nordstrom guy. But what this is annoying. They're like, oh, credit card searches are up 400% or whatever. Dude, come on, CNBC. Come on, man. Every holiday season, every single one, credit card searches start skyrocketing like that. Let me go back to 2004. Look at this. I mean, it's an uptrend, more people searching online, but how is this a surprise? I don't know. They seem very shocked and impressed by it. All right. So MedInvestor here says short IWM. That's your Russell 2000 small cap. Tell us why. Chop Shop says smash the like button. And if you haven't watched Meet Kevin's first real estate ad, you must watch it. Babyface Kevin. the Meet Kevin real estate commercial. That was fun. Yeah, I remember making that. That was fun. If everyone would enforce like this, we'd be COVID free. The problem would be at what cost? Let's see. 18-month and 0% interest balance transfer cards will be the thing next year. Yeah, it is interesting that household and consumer debt, especially just household debt, is at a very, very high level. However, debt repayments are also very, very high, which isn't implying any kind of real stress yet. But yeah, credit card borrowing, consumer credit is increasing, quite substantially. So it's gonna be interesting. Here's households consumer credit level, just as an example, on screen here. I mean, we are so well above where we were pre-pandemic. It's remarkable. Almost $500 billion higher. Crazy. All right. How are stocks doing 10 minutes to the bell? 10 minutes to the bell. It's pretty much the same spot. A little bit of, look at that. Apple getting hit a little bit here. Actually, some of the retailers getting hit. Etsy, Apple, some soft pain here. Tesla down to about 1% up. It was as high as 2.5% at some point earlier in the morning here. SoFi up about 0.5%. It's gonna be an interesting open. I think some uncertainty. Woo! All right, let's see here. Adobe says consumers spent a record $5.29 billion on Thanksgiving Day per Adobe Analytics, up 2.9% year over year. Wow, that's actually really interesting. So Adobe tries to analyze consumer spending on Black Friday and Thanksgiving, and according to Adobe, consumers spent 2.9% more money on Thanksgiving this year than they did last year. That's actually somewhat surprising. I think people still are in the mindset of life is short. We're going to spend, we have some more money and some more wealth than before the pandemic. And for being cooped up for, 1 to 2 years, depending on your state, it's time to, it's time to live a little. Look at this. This Black Friday looks lame. Look at this. This is a Target here. Man, I remember the good old days of Black Friday. Back at what was that? What's that place called that has Brandsmart? That's it. The good old days at Brandsmart, Black Friday, where there are so many people, you can't even move. I mean, it's probably too soon to say it's like an alley in South Korea, right? Anyway, it was bad, but it was also really fun. That's really old. Or people running in. Of course, then people were trampling each other, and that's bad too. Into Best Buys and Walmarts. I don't know, but what they're showing on screen here looks like a party pooper kind of Black Friday. I don't know if I was betting on Black Friday retail sales and I saw that kind of walk into Black Friday store sale, I'd be like, short. Ay. All right. Let's look at the Fed term rate. Let's see what we got here. Fed terminal rate. So last week we were at 5.24. It fell to about 5.15 after the minutes came out. And today, back up, 5.198, almost back to 5.2. Oh, wow. We got somebody here calling me Grandpa now. Look at this. Okay, Grandpa, next you'll be talking about how gas was $2 and you made deals with a handshake. Well, let me tell you about how gas was 97 cents when I went to Disney World when I was 7 years old. Now, that's also really weird because I have a son now that's 7 years old. And boy, I remember gas being under $1. That was pretty remarkable. Seeing gas under $1 and just thinking about it now, it's just like, oh gosh, gas today just sucks. All right, let's see. So we have, I want to touch a little bit on this Binance crypto fund. I'm researching a little bit more into this about this sort of bailout fund the CZ wants to put together. And I'll tell you, I don't trust the guy. They're talking about how they might be able to raise up to $2 billion in commitments from other industry businesses. And it's like, wait, so have you raised the one yet? The $1 billion? I don't know. CoinList is pulling the withdrawals card now, freezing or suggesting there are technical issues affecting withdrawals. I don't know. It's I don't know that we're for sure at a bottom yet in crypto. If we had a bad CPI report here in December, oh man, I think that's when the next shoes fall in crypto. Hey, maybe we get a positive CPI report though, and prices lift a little bit, and that pressure is taken off. That would be good. I really believe in blockchain. I just don't so much in the speculative asset valuations. So we'll see. So it was only for a few days. You're right. The 99-cent thing. That's crazy that you remember that. Crypto won't get a bailout from real banks like the Fed until it's actually coming from, centralized organizations. Yeah, the bailout fund is seriously sus. Exactly. Yeah. Okay. CoinDesk reporting that he already raised $1 billion. I wonder how much of that is just like, oh, it's Binance token commitments, and because that's what they do in their Seifu thing too. It's just a bunch of Binance tokens. But like, if those drop in value, now your bailout fund starts becoming worthless. Yeah. Yeah, there you go. Yeah. Brian nails it. How much is backed by the BNB token, right? Exactly. Like, I mean, I hate to say it, but if they're like, hey, we got $2 billion in treasuries ready to go. Okay. My girlfriend is shopping at an outlet mall and says it's packed. Nice. Now, the real question is, why are you letting her go to an outlet mall instead of a real one? No, it's all good. All right. So we are 3 minutes away from the bell. We generally don't get earnings on Fridays. We could see if there's anything pre-market. I didn't see anything this morning, so I doubt it. No, I mean, a couple teeny weeny ones, but nothing notable. So nothing for earnings today. It's going to be a big focus on the consumer, I would suggest, or anticipate almost all day long. Let's see here. Headlines on Bloomberg today. China's COVID restrictions spread as daily cases top 30,000. Oh, no. 30,000. I remember when cities had more than 30,000 cases here in America. Hey, but then again, reportedly they've had like less than 6,000 deaths. So, if you take the economy out of the question, a lot less dead people. But are they then bored? I don't know. Yeah. So, all right, let's see here. Let's take a look at the floor of the New York Stock Exchange. Who are these people waving hands?
You can make your way. I don't know. They can make a trade maybe if they want. Go to Post 8 and make a market in a stock.
There's a smorgasbord to be had. This is a great tradition. It's really wonderful to see.
That's pretty cool. Ringing the bell on Thanksgiving.
Today.
Very nice. Interesting, too, given that we've just talked about some of the restrictions in China. We obviously have made a lot more progress in this country, whether it's about travel or going to the movies or shows or even things like this.
That's such a cool building. We'll actually be there on December 9th. And we want to bring as many of y'all as possible. All right, let's see. Then we have 1 minute to go to the bell. And Greta Thunberg sues her native Sweden for failing on climate. Oh, my gosh. Oh, man, Greta. Oh, I can only imagine the next lifetime of headlines we're going to get with Greta Thunberg in it about the climate. She's so pissed. Yikes. All right, here we go. 20 seconds to the bell. Let's get ready.
This folks says would be the 13th best Thanksgiving week since 1945. So the melt up has been taking.
Thanks, Saeed, for being here.
A little bit lower. I think it's JP Morgan yesterday looking for better demand for global bonds in 2023 as supply rises. Expect to slow Thanksgiving demand, which might bring some relief. We start the opening bell on the CNBC Real-Time Exchange with a big board. It's American Express celebrating Small Business Saturday, and the NASDAQ New York City Mayor Eric Adams also celebrating Small Business Saturday. That's a franchise that Amex got going long ago to compete with Black Friday.
Yeah, I hate to say it, but I never really got excited about small business, American Express. And that's not to like diss on small businesses. It's just to say, I don't know. I mean, like if I'm walking around a downtown area or whatever, look, I'm down to shop and eat or whatever at small businesses. But, am I really going like, or consumers, I should say, maybe broadly, really going out of their way to jump on this? I don't know. I don't know about that. The small business pushes. Well, we'll see, I guess. All right, so what do we got here? Let's look at the. Let's start with the indices here. The first 15 minutes are always such a crisis. So we got about 0.5% to the downside here on the Nasdaq. Looks like it's trying to trend in the green direction. It's going to be too early to tell here. Lots more red though. You've got Tesla in pre-market was up as much as 2.5%. Now turning red. It looks like a lot of the heat map as well is turning red. You can see that here. We were closer to about 80% green. Now we're more like 60% green. So bizarro behavior always at the beginning of the open. Nasdaq now down 0.6%. We've got, let's see here. Okay. Here we go. Looks like NEO down 4.7%, Carvana 4, Redfin 2.8, Apple down 2%. That's going to drag the indices a little bit. Again, a lot of fear about Apple regarding the massive delays we're seeing for the iPhone. In the last live stream, we were looking at how long it would take to actually get an iPhone, and you're sitting at somewhere around the first week of January to get an iPhone now, which it makes you wonder how much is that actually going to affect the potential holiday sales season for the iPhone. I mean, anybody who today says, "Oh, I'm gonna, get my son or daughter or whatever an iPhone," can't get them. I guess you're stuck with the Google Pixel. I mean, I should actually try to give this thing a little bit more of a shot. I barely use this thing. Anyway, I have my reasons for having 3 phones. Okay, maybe one day I'll make a video on it. We'll see. Thumbs up for tech review videos from Meet Kevin. Ay. All right. So, what else do we have here? Let's see. BMW doubles investment to $2.1 billion in Hungary. EV plant. Great. We had a lot of battery manufacturing announcements in the United States coming as well, just over the last few weeks, and more expected. Goldman Sachs to boost Germany presence with Munich office. München. All right. Let's see. Credit insurance claims set to spike in 2023 as firms struggle. See, and that I think is the interesting part is the potential pain we might see at companies going forward. I don't know that is entirely clear yet how much actual credit distress we're going to see, because we really just haven't seen it yet. Corner of the insurance market is seeing claims already start to rise. Oh, see, now that's quite interesting. As companies struggle globally with inflation and global interest rates rise, the number of claims linked to trade credit insurance, which compensate a supplier in the event its customers stop paying, are still manageable below 30%, lower than pre-COVID levels, but are expected to climb further next year. Interesting. You know who needs a lot of credit insurance right now is Elon Musk. Probably getting some complaints over there with them not paying certain obligations that were incurred before Elon Musk took over. But on one hand, it's a good way to burn a relationship. On another hand, it's one way to save money. I don't know. I don't know where the ethics on that one stand. It doesn't sound too good. But all right, let's take a listen in over here for a moment.
There's a sense that we're going to have to at least game out what happens if it doesn't happen.
And I think some of that is based on the fact that there is a belief that, again, were the deal to break, were there to be a mutual termination, for example, that you simply would not see the downside in Activision. Some even arguing perhaps you would actually get a rating a bit higher. That said, we've seen recent weakness from Take-Two. So the peer group has not been performing particularly well, but there is a sense that sort of things have kind of calmed and in fact improved over the last 10 months at Activision during this period.
Yeah, and to your point, I mean, the video game industry, it would seem, is at risk of posting its first annual sales decline in at least a decade. We've had commentary from some of these video game publishers in their recent earnings, basically suggesting that you're not going to see some big blockbuster releases that would be expected during the holiday season in years past as well. So certainly there's a bigger, broader dynamic playing out for the video game industry. Also really noteworthy, though, about the Microsoft piece of this deal puzzle, because that.
Yeah, I'm going to pull here. And I want to say just yesterday morning, I was looking at the Activision Blizzard deal before we got this news about the potential for the government stepping in, the FTC stepping in and potentially rejecting the deal, which is possible, for monopolistic concerns or whatever. I was looking at the valuation for Activision a little bit, and their EPS has collapsed so much. And even if you give them $2 of EPS, you look at the stock at $75 divided by 2, you're sitting at 37.5 times earnings, which is very, very high for a company that's actually got its growth substantially decelerating. Now, I know we're facing tough 2021 comps, and so the big question is, hey, can Activision actually get back to a level of growth? Then the question is going to be, okay, great, how much EPS growth are we going to see? If it's 10%, now you're still selling for 3 or 4 times on a PEG ratio. It's actually somewhat expensive. So no matter how you slice it, the Activision valuation is expensive right now relative to other opportunities in the stock market. And it's likely because of the belief that, this deal could actually happen at somewhere around $93. Things trading at $74 right now. So I think it's really being propped up probably by an excess of $25, something like that, because of the potential for that deal happening. Warren Buffett recently trimmed his stake a little bit in Activision. He's been in this one playing the arbitrage, but he actually just recently trimmed his position a little bit in that, and so that opens up this sort of idea of, okay, well, maybe this isn't actually going to happen. What does Buffett know that we'd like to know? Who knows? But NEO down about 4.6%. Indices still red. Seems like really dragged down by Apple at the moment. Apple down over 2% and NASDAQ down about 0.5%. Though it does look like trying to get a few green shoots here. Let's see. And the stock market close will actually happen a little bit early today, which is always kind of interesting when they do that. It's going to be 3 hours early today, which means the stock market's really only open for about 3.5 hours. Kind of lame. That sort of means we'll have a market closing live stream at like a weird time. That means we'll be doing that at 10 a.m. California time. Man, weird.
Shares to help to bolster the balance sheet of Credit Suisse. But the question that we've had, and when I say we, I'm reflecting what I'm hearing from many people in the marketplace, is simply whether it's going to be enough. Because as I'd reported on Wednesday, that outflow of assets, particularly from wealth management, where it was centered, was surprising to even executives, I believe, at CS, in terms of the fact of the numbers, which were about 85 billion overall out. Remember, as much as 6% at wealth management, and the fact that it didn't stop. And so what appeared to be, an offering that was going to actually be used in part to add to capital, help initiatives that were going to be underway, retention packages, may now only be enough to sort of keep the rating agencies happy, to maintain an investment grade rating, but not enough to do those other things. What that means is we expect that there might be more behind it, Carl, and that would obviously be even more dilution for a company that has about a $9 billion market value right now.
Wow.
As we pointed out.
Credit Suisse has got some big problems. It's interesting to see 5-year break-even inflation rates tick up slightly today. 2.41 on Wednesday. We were sitting at 2.39. Terminal Fed funds rate still sitting 5.1979. And let's see what else we have. It seems like a little bit of a relaxing morning so far. Let's see here. High inflation to tamp down gift giving. That's it. No gifts. No gifts this year. Inflation's too high. I'm actually so bad at dealing with gifts. I have a deal with Lauren that I never do gifts. That is like, she does everything. I can't do gifts for other people. I can't remember all the birthdays. I can't remember the holidays. I can't remember, all the crazy times we got to do gifts. It's just, You do it. She's like, that's fine. She likes doing gifts. So we have a deal. I can't handle it. It's so stressful. It's like, oh crap, so-and-so's got a birthday. And then you're like, ah, damn, like, what do they like? I got to go find something. I got to order it. It's on bad. Oh gosh, the stress. No. Oh, I hate it. I can't handle it. So I try to get things out of my life. U.S. retailers are bracing for a slower than normal Black Friday as sagging consumer sentiment erodes Americans' demand for material goods. This is a report by Bloomberg here. After adjusting for inflation, sales are likely to fall by 1.2%. That's okay. That's with adjusting for inflation. Okay, so that's actually interesting because Adobe did say that sales were up 2.9% year over year, but they didn't say real spending was up 2.9% year over year on Thanksgiving. So that could actually indicate about a 5% fall there. But they're suggesting here in Bloomberg that on Black Friday, we might see, actually for the entire season, we might see sales fall 1.2%. First decline since 2009. A lot of nuance to be gained from companies building up inventory. And of course, red flags coming from Nordstrom and Kohl's flagging weaker consumer demand into October and November. You see that at a lot of companies, by the way. Many companies, even like short-term vacation rental companies, are like, we expect or are starting to see more pain going into October and November than we had seen in actually Q3. Because remember, October and November are actually not Q3. So we're hearing sneak peeks for Q4 in the Q3 earnings calls, which ends with September. Okay, according to Bloomberg here as well, half of Gen Z customers who participate said they will, who participated in some surveys said they'll be shopping online this season during Black Friday and Cyber Monday more than they did last year. Ooh, Gen Z going online. Got to buy those products from TikTok. Yeah. Man, they should be buying the courses on building your wealth and get off the TikTok. Okay, you could be on TikTok. It's fine. But buying the stuff on there. What was it the other day? Lauren bought something off of Instagram. And I'm like, why'd you buy that? And she's like, it's fine. Like, it's not like a match. Like, was legitimately curious. Like, why? She's like, oh, I saw it on Instagram. I'm like, we don't need that. Yeah, I know. I saw it on Instagram and it was cool. Usually I don't buy stuff off the ads. So she says, and I'm like, oh man, the ads are starting to work. It's the start of a bad trend. Anyway, Hot Wheels and Paw Patrol are top sellers. Boy, my kids have not liked Paw Patrol in years. They did like it a lot for a while, though. Well, I missed the Paw Patrol days because Chase was always on the case. The list includes some perennial favorites, such as air fryers, smart speakers, and Apple iPads. The Nintendo Switch is a top-selling gaming console, while brisk-selling toys include Hot Wheels and Paw Patrol. Among other categories, kitchenware sales are up 155% from October, which is a relief for retailers. Well, I mean, of course sales are up from October. It's Black Friday month. All right. Did you hear about those strikes at Amazon, by the way? It'll be interesting to see if we have any disruptions with Amazon. Yeah, Activision Blizzard down 3.5% after reports of the potential FTC lawsuit. Talked about that a little bit. More than half of the 1,000 respondents to a Retail Me Not holiday trend survey said they are coping with sky-high inflation this year by purchasing fewer gifts. There's the gifts argument. Yikes. Would Airbnb be seasonal though? At least from what I'm what I'm hearing from just anecdotes, which are stories from people in the industry, it's slower than usual. So it's a relatively strong slowdown. You can always give a gift card, problem solved. Yeah, I know, but then you get that like, oh, is that as personalized? Does that feel a little last minute-ish? I personally think gift cards also kind of suck. I'd rather want cold hard cash, but then that also feels like a little cold. See, gift cards, on average, 10% of gift cards are like the money on gift cards is never used. That's because maybe like there's a buck left on it and you kind of lose it. Like gift cards are a brilliant thing for businesses to sell because 10% of them never get used. So people spend $100 on a gift card. on average, the company's going to pocket $10 immediately from that gift card sale in pure freaking profit, baby. It's gift cards are like really brilliant for the industry, really bad for consumers because they don't use it all, so they don't actually get the full value. This is where cold hard cash is better. But again, you know, then it feels a little more cold. It's kind of interesting. If I had to pick Google or Amazon, which would I invest in? Okay, that's actually a good question, and it'll be, yeah. So I'm very concerned. We talked about this in the course member live stream a few days ago. I'm very concerned about fulfillment. I think fulfillment is a race to the bottom, a very expensive race to the bottom. Shopify, Target, Walmart, Amazon, all competing for faster, better shipment and fulfillment. I think it's extremely expensive, and I think it's exponentially more expensive the faster you try to do it, going from 2-day to 1-day to same day to drone shipments to, you know, hey, we'll drive and go pick it up in the store for you. It's a very difficult business. You do have an AWS slowdown as well, which is a little bit concerning. You do have similar concerns over at Google for that. But I'd probably be a little bit more inclined to have, if I had to pick out of those two, Google exposure right now than Amazon exposure, though I do think they're both phenomenal companies. So, yeah, there you have it. All right, folks, thank you for being here. Enjoy your Black Friday. Good luck out there. Let's do a quick look at the sticks one more time. Remember, it is Black Friday, and you can take that 60% off coupon code to the bank on lifetime access for the programs on building your wealth. Activision Blizzard now down 4%, NASDAQ down 0.6%, Tesla down about 1.2%, giving back some of that 7.8% rally we had on Wednesday. Facebook down about a third of 1%. The Tattooed Chef up 4.3%, Neo down 4.3%, Roku down 1.77%, Apple still sitting at negative 2%. There you have it, folks. Thanks for being here. We'll see you in the next one. We'll actually see you at the early market close. Goodbye.